Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you as always for coming on the program.
Good afternoon, Devin.
Well, Professor, we're coming up on the Federal Reserve's decision on interest rates, a matter of hours now. Ahead of that, signs that inflation in the U.S. is coming down. The Fed, of course, has been raising rates by 75 basis points at a time, but this time's expected to be less aggressive. What do you see coming out of this week's meeting, Professor?
Well, according to October's FOMC meeting minutes released in early November, it looks that FOMC members are seriously arguing on the size of interest rate hike on December FOMC meeting between 0.75% and 0.5%. But the majority, I mean more than 8 members out of 15 members, is for 0.5 interest rate hike in December meeting due to a series of signals on stabilizing inflation. And U.S. Bureau of Labor Statistics announced yesterday that consumer price rose by 7.1% on year last month at the slowest 12-month pace since December 2021. The November inflation figures leave the Fed on track to lift interest rate by 0.5% point on Wednesday, following larger increases of 0.75 point at their past 4 meetings. Wednesday's increase would be the 7th consecutive rate increase this year amid at combating inflation by slowing the economy. 2 straight months of moderating price pressure could complicate Fed's deliberations over how high to raise interest rate early next year.
Right. Well, overnight, stocks in the U.S. closed with a decent gain, though not as big as it was earlier in the session. Investors were encouraged by that inflation data for November, coming in lower than expected, which you mentioned. Tech shares on the Nasdaq up a little over 1%. What's the story in the global markets?
U.S. Stock indexes climbed and bond yields fell Tuesday after fresh data showed inflation eased last month in U.S., which is a welcome development for the investors who have been anxious about rising prices for much of the year. The S&P 500 added 0.7%, powering some of its stronger gains from earlier in the session. The Nasdaq composite rose 1%. Dow Jones Industrial Average added 0.3%. The latest data on the consumer price index shows that inflation rose 7.1% in November on yearly basis, compared with 7.7% in October. And this is cooler than economists surveyed by U.S. media. Core inflation, which excludes food and energy, increased by 6%. Softening from 6.3% in the previous month. All Asian markets expanded today. Hong Kong's Hang Seng Index rose 0.6%, and Japan's Nikkei 225 added 0.7%. The Shanghai Composite Index marginally closed up by 0.01% as of 3 p.m. in Seoul time.
Well, it was a gain for Korean stocks today as well. Investors are cautious, though, about what the Fed's going to do. Of course, also we see the exchange rate coming down to below 1,300 won to the dollar. Tell us about the domestic market, Professor.
All domestic indexes rose today as U.S. market advanced yesterday due to stabilizing inflation pressure. However, the rise of domestic markets are limited for uncertainty of the FOMC meeting's U.S. key interest rate decision tomorrow. The benchmark Kospi added 1.1%, and Kosdaq further expanded by 1.9%. In Kospi market, foreign investors and domestic institutional investors purchase led the market upside. The combined net purchase of the 2 investor groups were 445 billion won. Most of the top 20 market cap stocks rose today. Samsung Electronics rose 1.3%, and the second largest market cap, LG Energy Solution, also added 0.4% today. But the 4th largest cap stock, SK Hynix, dropped 0.6%. POSCO also dropped 0.2% today.
Well, finally, Professor, oil prices are bouncing back from their recent lows, the biggest rise we've seen in over a month the past couple of days. Gold price is up now, too, at about $1,825. What do you see happening with these commodities, gold and oil?
Oil prices climbed today with global crude benchmark Brent rising around 3.4% to $80.68 a barrel, the biggest one-day jump in more than a month. The first reason for rising oil prices, Hong Kong's rollback of COVID-19 restrictions on people arriving in the city, spurred by optimism about China's reopening. The second reason for higher oil price is related to U.S. oil supply concerns. A key pipeline supplying oil to the United States, which is the world's biggest oil consumer, remained shut down, and it tightened the supply and raised the prospects that inventories in the U.S. will decline. And regarding the gold price, historically, the gold price is negatively related to U.S. dollar value. Gold prices edged up Tuesday on the back of softer U.S. dollar, although prices moved in a tight range as investors maintained caution ahead of U.S. inflation data and the Federal Reserve policy decision. There is a high possibility, actually, that the international gold price would be more adjusted depending on U.S. Fed's final interest decision of the year on Wednesday.
Right, we'll have to see what happens there and talk about that next time. Professor, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much, Devin.